Thank you, Manal. Good morning, everybody. And good afternoon, good evening for those online. The MAP statistics. If I could get the slides, please. Thank you. So what happened in 23? And like Manal said, if there's something important, that it is that today I can not only give you the MAP statistics, but also for the first time, some APA statistics. So let's see what 23 has brought us. And so this is the first time since we are publishing our MAP statistics in 2016 in the new MAP statistics reporting framework that we can show without any doubt that inventory has gone down. Because for the first time, and the old cases and the new cases went down. So it's the first time that we see a decrease in inventory without any doubt. And so when I built a little bit on that ID, excuse me, you can see on this overview slide a drop in the growth rate. For transfer pricing cases, it's almost 5% less than last year. For other cases, it's a little bit, it's only 0.5, but still there's a small decrease. Of course, that's compared to last year. If we compare to 2016, you can see it from the left to the right on the slide, there's still a big growth rate. So it means that there's still a lot of cases to be resolved. But it is good that for the first time in a long time, we see a decrease of the inventory. Now, unlike the previous years where only a few jurisdictions were able to lower their inventory, we see now that in the top 15, more than half of the jurisdictions were able to decrease their inventory. And of course, I mean, otherwise we probably wouldn't have seen the result we have seen in the previous slides. But it is remarkable. Some of them even managed to lower their inventory by almost 100 cases. And even the few jurisdictions where there is a small increase in the inventory, we only see like small increases, and the maximum one is 40 cases, and that's for a jurisdiction with many cases in inventory, so it's not a big increase for that jurisdiction. So this is also a first where we see that many are being able to decrease the inventory. Now, if I go further with that, you can see that the situation is not exactly the same in all these jurisdictions, because for some of them, it is mainly the transfer prices that have gone down. For others, it's mainly the other cases that have gone down. And for some of them both, but like France, for example, has seen a very big decrease in number of transfer pricing cases, but an increase in number of other cases. In Germany, it's the other way around. They have an increase in transfer pricing cases, a decrease in other cases. So we really see different situations depending on the jurisdiction. Cases opened. And so when we see the decrease, why is there a decrease? Is there a decrease because there's less cases opened? Competent authorities worked better, or perhaps because of both reasons together. And so if we look at cases opened, we already see that there is a drop. And the drop with respect to transfer pricing cases is quite big. There's a drop of almost 15% of cases initiated for transfer pricing cases. For other cases, it's smaller, but there is also a drop. No, there's a small increase, excuse me, for other cases. Now, again, just like I said previously, if you compare with 2016, perhaps compared to last year, there's a drop. Compared to 2016, there's still a lot more cases coming in every year. So there's still a lot of work for the competent authorities to be done. But now we see a decrease in cases initiated. It is my pleasure to say that competent authorities are constantly making more and more efforts to resolve more and more cases, and so we see an increase in the number of cases closed. And so I can say that it is because we have perhaps less cases entering the MAP pipeline, but also, again, an increase of cases being resolved that caused the inventory to go down. So I think we can say, and we should say, that the hard work of all competent authorities is the cause, partly, of the good result we have seen this year. MAP remains concentrated, and I think Achim may have alluded to that last year already. If you look at the top 5, they are good for 47% of all MAP cases worldwide, and the top 10 jurisdictions in MAP are good for 3/4 of all the MAP cases. So if those jurisdictions would be able to deal with all their cases quickly, most of them would be closed. And that number has been a bit constant over the years, but what is perhaps remarkable is that if you look at 2016, there were 51 jurisdictions that had MAP cases. Now we are almost at the double, with almost 100 countries that have MAP cases. And so I'm quite sure that the fact that MAP has got more and more attention, thanks to BEPS Section 14. We are now also reviewing the smaller jurisdictions with less experience. They have MAP profiles, they have MAP guidance, there are contact details for the competent authorities, so more and more cases are being introduced and initiated in more and more countries, which is, I think, good for business because it shows that they have more chances of their taxations, double taxations being resolved also in other countries and not only in the usual MAP countries. Now, the average time to close cases, well, for transfer pricing cases, you see a bit of a yo-yo. It goes up, it goes down, it goes up again, it goes down. There may be several reasons, but I think it's fair to say that because old cases are also being closed, we see that the number is a bit higher. But then again, it is also important that the old cases are being resolved. And so in that sense, I know that 32 months is a lot, but if the cases are resolved, then I think the 32 months are not that bad, although I'm quite sure that business would like to see them resolved a lot quicker than that. But we see that competent authorities are doing their best. Other cases, the average is going down. It is still below 24 months, and perhaps if I show you this, you can see for the pre-2016 cases, of course, and that is causing this increase in the average time to close cases because there's still pre-2016 cases in inventory. And so if you solve them now, it's already 113 months on average to solve these cases. So they are making the inventory going up. And you would say, yeah, but that is not the case for the new cases, like we say, but new cases is a bit a weird definition because new cases are the cases that started after the 1st of January 2016. But if you have a case from 2016, I wouldn't call that a new case anymore. It already has become an older case. And so closing those cases will also get that average time up. So that explains, I think, why at the bottom of the graph you see that also the post-2015 cases, the average time is going up. But I think it's normal because we also have like older cases there. Now, on the right, you can see that for the first time we have some extra information, and that is with respect to the age of the cases that remain in inventory. And so we now can see how many of the cases are between 0 and 2 years, between 2 and 4 years, 4 and 6 years, and older than 6 years, plus, of course, the pre-cases that are, per definition, older than 6 years. And you can see that half of the cases in the MAP inventory are between 0 and 2 years, and that another 20% is between 2 and 4 years. So most of the cases are probably going to get resolved, and make sure that that average will probably remain somewhere around the 24 months. Now, showing this inventory and the age of the cases in inventory is important because we can see what's happening. It provides more transparency also on how a jurisdiction is doing, and so we can use that in the peer review, but also show how a jurisdiction is doing and how old cases are. And it is important to know, because you could, of course, easily only solve your new cases and you would have a very nice average of like 10 months or 15 months, but then your old cases remain in inventory. So this will show if your inventory is a little bit higher, but you also close your old cases, that you still did a very good job. And so we are happy that we have that information now, and that you can see how old the cases are. Now, the MAP outcomes, and let me allow me to immediately go to the next slide so that I can give you the break up between the other cases and the transfer pricing cases. If we, for example, look at transfer pricing cases, we see more than 70% fully resolving the taxation not in accordance, and other outcomes that are as good as that, of course, like the unilateral relief. If the case is resolved via domestic remedies before MAP, the taxpayer still gets his good result. Perhaps remarkable here is the increase in the number of no agreement cases. Now, I think because we asked some questions, and so the increase in the number of no agreements is caused because at one point, when they did a lot of endeavors to resolve the cases, and when they still, after all those endeavors, didn't manage to close the case, at one point competent authorities now decide we've done what we could, we can't do anything more, and they don't do that after 2 years. They do that after a longer time period when they really tried and tried again and tried one more time, and when it doesn't work, they now close the cases. So I think that causes the increase in the cases where there's no agreement, and of course we would like to see that there are no cases where there's no agreement, but I'm afraid that reality is that as long as we don't have arbitration in all of our treaties, there will always be cases where that cannot be resolved. Although I have to say, we are working on endeavoring and discussing a lot in the MAP forum what endeavoring means, and so competent authorities are really trying to find solutions and to be willing to compromise, to come to solutions to solve the cases, but sometimes it is just not possible. Now, I just wanted to show here with this slide that between jurisdictions there may be differences. So for some jurisdictions, the number of cases where there's full agreement to solve the case is at about 80%. In others, it's 40%. Some of them have no cases where there's no agreement. Some of them, it goes up to 20%. Unilateral relief, the top one has more than 30% of unilateral relief, which is, of course, very good. It goes down for other jurisdictions. And so there's a lot of differences between the jurisdictions. And if you would like to learn more about how it is in a specific jurisdiction, then we have the country-specific files where you can get a lot of information. And so you get per jurisdiction the situation of the MAP caseload. You get the numbers, how many old cases are left, how many new cases are there, how many were initiated, how many are resolved, how many remain in inventory, what are the outcomes for the jurisdiction, for TP cases, for other cases, and the main MAP partners of the jurisdiction. And this is a jurisdiction that did rather well. as you can see from the outcomes and the number of old cases being quite small. But that's the information you can get for every jurisdiction. And if you want to compare jurisdictions, we have this Compare Your Country tool, where you can quickly use a few indicators and compare a few jurisdictions with each other. So that is something you can also find on our website. That's for MAP. Then, like Manal said, for the first time we have the APA statistics. The jurisdictions that have an APA program committed to provide APA statistics. It is not part of the minimum standard, so it is not part of Action 14. It is an additional commitment from the jurisdictions that have an APA program, and they wanted to do that because it provides a more holistic view on what these competent authorities are doing with respect to dispute prevention and dispute resolution. And we have statistics from 46 jurisdictions for 23. Now, some things are not the same. They do not necessarily all have the same reporting period, because some report from the 1st of January to the end of the year, others start the 1st of April until the end of March, so there are some differences there. Not everybody uses the same start date and end date, but they usually explain in the statistics what their start date and end date is, so that you can compare jurisdictions, because otherwise you risk comparing apples and oranges. So it's good to look at, when you look at what is the average of a certain jurisdiction, because if their end date is once it is implemented and others have an end date before implementation, of course that makes a big difference. So it's good to take that into consideration. Now, what can we see? More than 1,100 APAs initiated, so requested in 23, and more than 800 granted in 23. Only 15 rejected when they were initiated, and 100 closed for other reasons, meaning that either the competent authorities couldn't come to an agreement, or the taxpayer withdrew his request, or another reason. And we see inventory getting up. Now, the average time to grant APAs was 36.79 months. We hope that with the BAPAM and with the best practices we have in the BAPAM, we will see this average time going down in the future, when more and more jurisdictions will have incorporated and implemented some of the best practices to get the A back into the APA. And here you can see a little bit the top 10 jurisdictions with the highest APA to transfer pricing MAP case ratio. But just like Manal said, it's not because you're not in that top 10 that you didn't do a lot of effort in dealing with APAs. But if you have like a higher number of MAP cases, then of course it's more difficult to get there in your APAs, because we make the ratios. Now, the average closing ratios is 25%, and I think it's good to say that more than 88% of APAs closed result in a signed agreement, which is, I think, a very good outcome. And so you get that information on all jurisdictions as well. Now, the only thing left for me to say is that we have a lot of information for taxpayers, and where in the past you needed to go and collect that at several places, like the statistics here, the peer review report, the contact details. We have all that information together in one document that we publish on the website, and so you can find everything you need to know on a certain jurisdiction in that document. And just to show you what is included, so you have, and I took the Netherlands as an example, you have how the competent authorities organized and things like that. You have the structure, some information on the MAP statistics, and things like that. And with that, I'll leave it to Laurence to say a few words.
Thank you, Sandra, for an excellent presentation. And now I will turn over to Mr. Rick Miner, who's a very brave man taking over and giving us the view from business.
So, yeah, thank you. Just found out a few minutes ago I would be doing this, but the good news is this is MAP is one of my favorite topics, tax controversy, cross-border dispute resolution, and so I do follow this. By the way, I'm head of tax with the U.S. Council for International Business. We are the U.S. dues-paying member of BEAC. I also sit on the BEAC Tax Bureau with Laurence, who was supposed to be making this presentation. And I know Laurence is also very dedicated to tax certainty. She heads up the subcommittee on tax certainty for BEAC. But let me just start I want to commend Sandra and her team for the excellent job that they do in maintaining these statistics. It's essential for practitioners and also who are members of USCIB and also companies to have these statistics on a regular basis and be able to compare how things have improved or have not improved year to year, as indicated by these statistics. And they have become invaluable, and one of the milestones that my members look forward to every year when these statistics are released. So thank you, Sandra, and keep up the good work in that regard. From a business perspective, I just want to be realistic. Our businesses would rather not get into a situation where they need to turn to MAP, but we're happy to have that as an option. If it gets to that point, I'm a U.S. person, so I would also like to point out how important the APA program is in the U.S. And that program has been clearly gaining strength year to year, thanks to the efforts of Jennifer Best previously and her team. It's very important in the U.S., the APA program, because the U.S. does not have as an extensive treaty network as many of our trading partners. So there are a lot of jurisdictions in which we do not have a MAP, our taxpayers don't have a MAP option. So the APA program is particularly important in the U.S. Just looking at the statistics that Sandra has highlighted, I'd like to focus on the fact that MAP inventories have gone down year to year. Of course, that's a good sign at first glance, but we will do a little bit deeper analysis to better understand, why that is the case. Is that just because there are fewer controversies or fewer cases being filed, or the cases, the backlog of cases that existed is finally decreasing? So I think there's a little bit more analysis for us to do as business to see the reasons for the inventories going down. We're certainly happy to see that more and more cases are being closed and would hope that trend continues. 75% of the MAP cases see full resolution of dispute. We'd like to see that percentage go up so that there would be even more comfort for taxpayers to decide to enter into a MAP procedure, because if the success rate is going to go down, then there's going to be less interest in taxpayers into going into the MAP process, and that's going to increase the risk of double taxation, which is going to be a unwelcome burden on business. Also see that the average time to resolve the MAP cases has gone up to 27 months. Again, the value of these statistics is that they provide benchmarks across the board so that individual countries that are managing their MAP programs have something to compare their own performance statistics against. And perhaps we'll be motivated to see that overall the statistics are improving, and hopefully that improvement will trickle down into the individual country MAP programs, and changes can be made to make the MAP statistics even better incrementally as they're reported year to year. Another concern or another consideration for taxpayers to initiate a MAP process is the amount of time that it takes for a MAP process to run its course. I already mentioned the issue of the success rate of the MAP procedure for motivating taxpayers to even consider MAP in the first place. So I see that 50% of open cases are less than 2 years old. I think that's a good statistic. The 25% of the open MAP cases are more than 4 years old. So as a taxpayer, it's hard to imagine why these cases should take more than 4 years. The other thing that is an excellent development from our perspective is the reporting of APA statistics. I mentioned before the situation in the U.S. where the APA program is extremely important to the taxpayer community because of the gap in our tax treaty network, which doesn't look like it's going to be improved anytime soon. So I would just, like to wrap up in saying that thanks for the efforts that you make in putting these statistics together. We take them upon their publication, analyze them. We also have groups in my organization dedicated to looking at international tax controversy, and we will be reporting out in one of our webinars on these statistics. So anyway, thanks for your patience, and I'll turn it over to the next person.
Thank you so much. Good morning again, colleagues. It is lovely to see you all looking so bright and bushy-tailed after last night's event. If you missed staying to the end, there was dancing and singing. So if you left early, you missed the party. We're now going to make a little more progress on our discussions on the pillars and all of the excellent work that has been done by all of you and our work with our colleagues in the OECD to make progress. So obviously the Global Minimum Tax Pillar 2 is already one of the most ambitious international tax reforms that we have driven together. And a great amount of work has gone in on how we develop a coordinated set of rules through so many fora which are trying to drive forward that. I recognise that there is still always more work to do, but great work so far. And the coordinated nature of the rules and their implementations, we hope, is going to minimise the uncertain outcomes for our MNEs. And I was certainly talking to Minel and colleagues, was it yesterday or the day before, about how we really work hard to ensure that we support our MNEs who are hosted in our jurisdictions in their navigation as they go through and start this process with us. Because actually opportunities for uncertainty remain for those businesses, and we really do need to make sure that we get the certainty for them, but also the certainty that I know that we are needing for ourselves. So I'd like to welcome my esteemed panel, some of whom have been on the stage so far this session, but some, this is their first go. So once again, Suzanne from the Netherlands, and welcome Adriana Gomes-Rigo, who's the Deputy Secretary for the Federal Revenue of Brazil. I think this is Akim's first go on the stage this time. So Akim Pross from the Centre for, from the OECD. And then welcome Gerasimos Thomas, the Director General for the EU Directorate General for Taxation and Customs Union. And I think Rick Miner, who I hope this was the session you were expecting to be at, not just the one you spontaneously had to do in the last session. So thank you once again for being on the stage with us. Now, as I'm sure many of you know, we in the UK are very committed to introducing Pillar 2, and we're in one of the first round of adopters. And that means that we are really committed to the project, but also that we acutely recognise the various challenges that businesses and administrations face as they come to implementation. And in this discussion that we're going to have in the next sort of 40-45 minutes, we want to recognise the importance of consistency for administrations and taxpayers as they are looking to identify the most effective way to manage some very scarce resources in this regard. Now, there are a number of working parties, and priority topics are being picked up through Working Party 11 and the appropriate FTA fora, such as Large Business International Programme. And some of that is going to segue neatly into the session after us, which will be led by our esteemed colleagues from Japan and the USA. So more to come after we do our piece here. So I wanted to turn to what I'm loving is now being called the Amsterdam Dialogue. I don't know if we will hold that as its ongoing title. But obviously, colleagues gathered in Amsterdam recently to discuss tax compliance and global minimum tax implementation. And this session focused on the challenges and opportunities for implementation and compliance. And I'm very grateful that Suzanne is going to give us some really good updates on that today. But before we progress, I would like to play a video giving us an update about the Amsterdam meeting. Thank you.
Welcome to the Netherlands. Welcome to our beautiful Amsterdam and to this FTA seminar. Welcome to the stage, Mr. Volkert Itzinga.
It's an honor to welcome you here in the Netherlands. Today and tomorrow we will discuss the opportunities and challenges that come with the practical implementation and application of the global minimum tax.
Estonia hasn't implemented Pillar 2 yet. We are hoping to listen to other countries' experiences and maybe to learn from their mistakes. So when we will start implementing the rules, we can take the experience of other countries into account, which will make things easier for us.
The Pillar 2 implementation affects many of our clients. For our advisory team, we will need to advise and support our clients in terms of implementation of the Pillar 2 rules so that they can comply with the rules in the coming years.
Let's get started on day 2.
It's our opportunity to reflect on what we heard yesterday, to share our own experiences, to ask questions and to identify common grounds.
It was useful to see that the priorities of different countries differ according to the stage of implementation that they are in, and that there are a lot of doors available for us to knock on to get the more information that we need.
I take home that it is really good to cooperate between different jurisdictions and share experience on Pillar 2, and also to work together both between the Ministry of Finance and the Tax Administration.
The hope is that the delegates, when they come together, they actually see that they're not that similar, or they're not that different from the other people that are in the room, and that we can learn, that we can innovate together, that people don't need to have to reinvent the wheel when they go home. They see a common challenge and they see a lot of opportunities, and I think they're seeing it. It's very important that we don't just write the rules, but we administer the rules sensibly and with the benefit of all the ideas of the people in this room. Fantastic event.
So, thank you all.
Wonderful. It looks like it was a great event, and I'm thrilled that Pillar 2 now has its own merchandise. So we obviously made good progress there. So Akeem, let's thank you for the work. I know you and your team are so vital to everything that we're progressing, and thank you on behalf of all of us for everything that you and colleagues do. So can you just give us a little bit of an update on where we are from a policy perspective as we move forward with this at the moment?
I totally can. Briefly, yes, merchandising is available. We don't want to compete with the bags of Athens, but if quietly you want a 15% bag, we do have them available. We took them to the Acropolis, but we couldn't take a picture of a pillar and a 15%. It's not allowed, but we'll try again. Eventually we'll have that, and we shall post it on our Instagram. One thing I think, and I have 5 minutes and I don't use more time. I'll speak very fast, but I don't use more than my 5 minutes. I will have one slide, only one slide. And this, I think, also goes to this point that you raised before in the Amsterdam dialogue, and where does this come from? And I think just a quick word just to explain that, I think, because it is important as we step back, and I'm taking a page out of Edward's book, if that's okay, to sort of step back a little bit and give you the context before I give you the rules. We were intuitively, the Dutch have a tendency of engaging with all stakeholders early, and they bring in all stakeholders. And that was sort of how the event came together. That was a very natural thing. And now this isn't a specific Dutch thing. We all do it, but it seems to come very naturally to the Dutch. So when I asked them, why is it that you tend to do this? They said, and now you need to correct me, they said, polder model. Now, if you don't speak Dutch and I don't speak Dutch, I don't really know what that means, but it was sort of interesting because it's a concept. And then I asked, and they said, well, what this is behind is polder is the land that we have reclaimed from the sea. And 50% of the Netherlands is actually below sea level. And we've been doing this since the Middle Ages. So if you don't bring all the stakeholders together perpetually, your dikes will fail and your pumps won't work. And even when they were battling the neighbors, they were still pumping together. So the idea of coming together, of bringing people on together on a common task and doing it early, I think is a very Dutch thing, and it's sort of interesting how this came about. And that, I think, is why the Amsterdam dialogue emerged from that concept, because we had business in the room, the financial accounting community, stakeholders, you've heard it, to think collectively about how we can move forward on this journey sensibly for tax administrations, for taxpayers, and for the wider economy. And I think that's quite important. As a special feature, Amsterdam dialogue also involves Angela singing and dancing occasionally, but that's a special feature. So then, turning to the first question here that you ask in my remaining 4 minutes, what's still in the works? Framing a bit the tax administration conversation that we have here with a bit of a wider picture about what's happening also on the tax policy side, what is still being developed. Angela mentioned Working Party 11. It's not just Working Party 11, but it's quite importantly Working Party 11, which importantly brings together the 140 countries that work together on thinking through questions related to the minimum tax. If you look into this room just for a second, Manel yesterday mentioned there's about 45 countries that have legislation either act in draft form for 24-25, and then there are 20 that have a stated intention or considering. We did the numbers, we always do the numbers, more than 85% of the people are in this room are actually in one of those two categories, and most of them in the first category. So it's quite a large number, it involves practically all of you, and even if you're not in this, like your M&Es are involved, so everybody really has an interest on succeeding in this common journey. So the first part on tax certainty, I think, that I want to mention, I'm going to go through all of those points. I'm going to focus on the ongoing work and why this is relevant and how it relates to tax certainty. The important part that came out of Amsterdam and to bear in mind is it is common rules that are supported by common data that all tax administrations receive at the same time. Same rules, same data at the same time, and that also brings opportunity and says, and we'll talk about this much more. Same rules also means guidance, the same interpretation of the same rule, the same guidance for the same rule. And so there is more guidance coming out. There's always a bit of a balancing act, and businesses conflicted, give us less guidance, give us more guidance. And there's a bit of a challenge that some of the advisors have pointed out to us. Don't give me more guidance, but give me guidance for my members of my business association. So there's always this bit of a challenge, but this is coming. We have an active conversation on permanent safe harbors, and the conversation may be shifting more to permanent safe harbors. That's certainly something where we have an active engagement. The idea being that you make the minimal number of adjustment to financial accounts while retaining the integrity of the rules. So a very big piece here on this one here. Very important to have consistent rules consistently applied. Peer review is the second point. Peer review is important because unlike transfer pricing, and many people sometimes intuitively tend to still misunderstand this, Pillar 2 is systemic, it is not transactional. So you don't have two tax administration at the end of each transaction that can possibly disagree, as is the setup in transfer pricing. It's systemic, we have a principle of rule order, and if you have a principle of rule order, we all need to have confidence that the rules are correctly applied by the other jurisdiction, because we take back our rules. And so in order to have this confidence, you need to have a review of the rules so that we have confidence to take back our rules. It also helps tax administration and businesses because it gives you certainty that the rules are actually the same rule. That's the whole idea. It also saves you resources because otherwise Angela and HMRC would have to do this for every country individually. Is this a good income inclusion rule? So we come together and decide that together to hold the rules together. And I think that's the peer review part that we're doing going forward. I think very important pieces here. The information exchange framework is almost done. The Global Information Return revised version that I think business might not like, but like better what they've seen before, is on its way. There's an XML schema. Many of these infrastructure pieces are basically there. I think compliance and administration framework I will skip because that's really what Cezanne talks about. Dispute resolution. We are working on a multilateral convention for dispute resolution specific to Pillar 2. And that's also a novelty because it's domestic law and there's questions of how you do it, what's the common legal basis, what's the scope. But it's a very active discussion also in those instances where there are disputes. And let's not forget that the rule order for the countries that implement will for the large part avoid disputes because it is systemic. So the easiest way to avoid disputes is to legislate the pillar. But apart from that dispute resolution mechanism, we recognize that there will be instances, a very active conversation, a very active discussion. Thank you for all the contributions also from the business community, input in designing, thinking this through the dispute resolution. There's a VEC piece, technical assistance. I see Esther here straight in my line, Kata, many others. I've talked with Marcio this morning, SIAT, ATAF very importantly also helping. They were also involved in the Amsterdam event about how can you build up, these are complicated rules, how can you get the benefit of those rules, how do we make them simpler, how does this work? A big issue. And then last, we call this interaction. I think Erasmus will call it decluttering, but there is an aspect, of course, here also where you then think as Pillar 2 moves forward and addresses systemically certain risks, are there certain other rules you might no longer need? And that, of course, looks different by different countries that have different legislative environments. There's an international dimension with BEPS actions. There's certainly an EU dimension, but there's also a domestic dimension, so that as we move forward, thinking of some of these concepts about how we can streamline tax administration, explore simpler approaches that take us to tax administration 3.0, how we can also declutter, simplify some of the other aspects that we may no longer need because they might appear duplicative in light of the implementation of Pillar 2. So a relatively big agenda. I think that's it.
Crikey, that's a lot in 5 minutes. So thank you so much for that. And I mean, I think part of our challenge here is we want to proceed with as much certainty as we possibly can. The reality is probably that until we actually start processing this through, we're probably not going to see any of the gaps or wrinkles that we might follow through. But we must still really work hard to see if we can be as complete as possible. So, Cezanne, it would be great, and thank you again for your work in hosting and bringing everybody together in Amsterdam. It sounds like it was an incredibly rich conversation. So I think colleagues I know there'll be a number of colleagues in the room who were there, but for others, it would be really helpful for you to share some of the key findings from that activity. Thank you.
Thank you, Angela, and very well pronounced, Achim, poldermodel. It's true, it's true. So with the GMT seminar in Amsterdam, we kicked off the global implementation of the GMT framework. And we had over 200 participants from close to 70 jurisdictions and hundreds of participants joining us online. And it provided an opportunity for early engagement across all stakeholder groups, which Achim mentioned that that's something that we always endorse and look after. So it's what we identified that it's a journey, and it's a journey that we are all in together, but at different stages of that journey. And that journey brought us from Amsterdam to Athens to report back, so I'm happy to do that. So maybe first, we started off discussing the challenges and opportunities that tax administrations face, and where we find that tax certainty is an important element also on this journey. And next to the fact that the Pillar 2 implementation poses significant challenges for taxpayers and tax administration, there is also an opportunity. We identified that working together can help us reduce the workload and improve outcomes. And maybe just a quick word on the challenges and the opportunities, because Achim also touched upon on them. But from a challenge perspective, we see that the rules are quite complex, even though they are uniform. There is a short time frame for implementation in certain jurisdictions. There are questions around interpretation still. And how do we get ready? So how do we train our personnel? How do we organize ourselves? Each country has its own type or amount of UPEs. Some countries have a few, other countries have a few hundred. So how do you organize, and where can we learn from each other? But like as Achim said, Pillar 2 also has opportunities. It has common rules and a uniform data set. So we are, as tax administration, looking at the same standards and data, and it also we have the guidance. Tax administrations are implementing simultaneously, so not precisely simultaneously, but we are all on that journey. And there are synergies by leveraging off the work and experience of others who have already started with working on implementing the Pillar 2 legislation. So that's on challenges and opportunities. In that context, there are 4 work streams that we see for the future, so clustering into 4 work streams. First of all, upfront compliance. How can we identify, map the taxpayers in scope? Can we guide them through the registration? We talked about earlier on engaging with taxpayers for SMEs yesterday, but also we can do that for M&Es. Can we nudge them to file on time? And what approaches can help to integrate this into existing corporate income tax systems? How can we support with IT solutions? So there are some ideas on that to first get the registration done, get the identification of the scope or the taxpayers that are in scope in place. Then the second work stream or team that we identified is the coordinated compliance or the risk assessment. So approaches to ensure consistent and efficient compliance verification. So we already can learn from a lot of work that we have been doing in the FTA arena. Think about tax control frameworks, cooperative compliance, risk approaches. We discussed that. There are also a few questions surrounding that. And one of the questions also that can come up is, okay, we have ask them to develop, we ask taxpayers to develop new systems for compliance, and how can we support that? For example, can we use the financial account data and verification processes that are in place, the existing tax control risk and frameworks, because that's also an ask from the business, right? How can we make it more efficient in this kind of processes? And next to being efficient, can we also be more, enhance the consistency that we ask? So can we build around the risk assessment systems, approaches, same rules, same data, information returns? They enable that smoother collaboration with taxpayers. The uniform implementation by countries will also help in that regard. Another question that we could ask ourselves on this topic is, can we build standardized risk filters Can we build that into the globe information return and use that as part of the systems approach? So there are a lot of areas that we can explore in that regard. I'm not done yet.
You're not done yet, nearly.
Sorry, I will.
Sorry.
A few more points. So the third theme is the QDMTD. So with emphasis on policy simplification and efficiency for the smaller and lower capacity jurisdictions. There are also questions around how can we simplify that for the jurisdictions that have few M&Es or limited resources. Can we find a streamlined approach that may help with the alignment of the QDMTD requirements? How can we enhance the information sharing? Achim touched upon that, so I'll quickly go over that. Fourth, dispute prevention and resolution. So Manal also mentioned something around that's important for the pillars, but it's also important for us and as a tax administration. How can we make mechanisms, or can we develop mechanisms that help to prevent and manage disputes proactively? So Achim mentioned the multilateral convention, but one of the other themes that we discussed in Amsterdam is how do we collaborate to develop consistent guidance and address common interpretation questions. So tax administrations wish to comprehend the rules and resolve issues in interpretation for consistency. We also discussed whether or not the ICAP framework could be extended to include Pillar 2 and using that to find common rules to promote alignment across jurisdictions. And let me go over there. So taking everything into account, it's essential to maintain close contact with your stakeholders because they provide you with the input. So the external stakeholders, they can help you make your systems better, make their lives easier, then compliance becomes a bit more better. So that's maybe a theme from my side to give back to this room. We mentioned it served as a kick-off for the Amsterdam dialogue. And it's an initiative, so we are aiming to foster ongoing and structured collaborations, knowledge sharing among the business, academia, tax administration, and all related bodies. But maybe one point of attention is that if you look at just only from the tax administration side, there's a lot going on Pillar 2 implementation. So we have a few working parties. We have FTA, LBIP, capacity building. So all these bodies involve different countries, institutions, participation ranging from a few countries to over 100 countries, involving both policy and administration. So maybe there is a risk of fragmentation. Personally, therefore, an ask for the OECD to maybe assert a level of governance on all the Pillar 2 work streams would be helpful. And the Amsterdam dialogue can add to that, so we can work together on addressing the key issues surrounding the implementation of the global minimum tax, including tax certainty. So please all join us. And my final words for me and my delegation, these have been a few enriching days, and I want to thank the host and the Secretariat for their hospitality and making this all possible. Thank you.
Wonderful. Thank you so much, Suzanne. And I think what's interesting listening to both of you and then reflecting back on the conversations we've had in the last couple of days about 3.0 is there could be a risk that we see these as two separate conversations. So we have a 3.0 conversation, and that's about the mass market and the individual citizen. And then we have this conversation, and that's about MNEs, and it's about big business. And they're separate parts of our organizations and separate things. But actually listening, there are I think, some real opportunities to connect these when we're thinking about our investment in our organizations, because at the heart of both topics is data. At the heart of both topics is how you exploit that data, how we help our customers, our businesses know what to do. That's about innovation around guidance and rules and AI. And I wonder, one of the things I'm just reflecting, listening to you both from a UK perspective, is whether or not we're being smart enough, as in my own implementation, about seeing that if we're smart, investment in infrastructure for some pieces of this might actually be investment that we can utilise more broadly. And it probably just strikes me as I listen to the both of you for that. So maybe I'm late to the party to it, but I ponder there's an opportunity here for us as leaders to work out how to navigate these in an overlapping fashion. I don't know if either of you think feel free to disagree if you think I'm making the wrong connections here.
Absolutely not. I will be violently agreeing this morning,
great.
absolutely,
okay,
and that's why
good,
I sort of take, because certainly has occurred to us that the second aspect that you mentioned, which is thinking about the systems aspect. Taxpayers are building systems, and systems isn't IT systems, it's a wider governance system of how do you know that when you file the global information return that you as a taxpayer have assurance that it's correct. And there's a question of, can we have confidence in these systems? It also saves us resources. If we think about the systems, like, do I have confidence in the systems to generate the number? And maybe if I do, and I have sort of standardized risk filters that I can run across the globe information return, you can come to this together. And you do see exactly as you describe, Angela, there is sort of a link to what we're discussing in tax administration 3.0, absolutely. And I think connecting this conceptually and thinking that through can be very beneficial.
Excellent. Okay, well, that's certainly something I'll be taking back and asking my teams. James, you need to write that down. Okay, so we're going to move on now. So, Adriana, welcome to the panel. Where do you see opportunities for cooperation with taxpayers to improve the tax certainty with the QDMTT context?
Thank you, Angela. Good morning, everybody. Well, I must begin saying that for us, the implementation of a global minimum tax represents a significant step forward in the ongoing battle against the BEPS. Because by establishing a minimum corporate tax rate, countries can work collaboratively to level the playing field, curb harmful tax competition, and generate a substantial additional revenue. In Brazil, there has been lots of events about Pillar 2, and we are trying to show to taxpayers that BEPS practices, such as profit shifting on low tax jurisdictions, have eroded the tax basis and undermined the integrity of international tax system. The global minimum tax aims to address these challenges by setting a minimum tax rate, discouraging aggressive tax planning, and ensuring that profits are taxed where economic activity occurs. For many countries like Brazil, particularly developing economies, the global minimum tax presents a golden opportunity to bolster tax revenue by guaranteeing that multinational corporations pay a fair share of taxes. Government can invest in essential public services like education, healthcare, and infrastructure. And this, in turn, can fuel economic growth and elevate living standards for citizens. That is what we are trying to show. A key challenge in the implementation of the global minimum tax is ensuring tax certainty for business operating in multiple jurisdictions. To mitigate risks and promote investments, it's crucial to have clear and predictable tax rules. So to maximize the benefits of the global minimum tax and ensure its effective implementation, cooperation between tax authorities and taxpayers is paramount. In Brazil, we can say that we have adopted 4 key strategies to enhance tax certainty. At first, transparent and inclusive public consultation, because we recently issued a provisional measure. It's a kind of law that has legislative force, but pending congressional ratification. And we implemented the global minimum tax, and now we are opening a normative instruction that regulates the key GMTT for public consultation. It will be until the end of November. We use tools like public consultations on regulations to get feedback from the taxpayers, to keep communication channels open, and actively seek their input. After that, we analyze the suggestion, and if they are reasonable, we change our regulation. We can change our regulation. Secondly, we also organize a regular Q&A sections, both in person and online, to address taxpayers' concerns with continuous dialogue for query resolution. Thirdly, we will also offer maps to resolve cross-border tax disputes efficiently and mitigate double taxation risks arising from the implementation of the global minimum tax. And at last but not least, we think that it's important to implement a collaborative working groups with taxpayers representation, with regular meetings to discuss pressing tax issues and seek consensus-based solutions that benefit both taxpayers and tax authorities. So, by embracing these cooperative approaches and prioritizing tax certainty, tax administration can foster a climate of trust and transparency, leading to improved tax compliance, reduced disputes, and a more equitable tax system. The global minimum tax, coupled with effective taxpayers' engagement, has the potential to reshape the global tax landscape and drive sustainable economic development. Thank you very much.
Wonderful, thank you, Adriana. And it's really interesting to hear, again, similar to Suzanne, the level of engagement with your customers, and that very openness to trying to take your businesses with you on this journey. And I'm sure they're really appreciating that. So, which leads me beautifully onto Rick. So, Rick, I might suggest that from the business community's perspective, this assembled room must be making you all incredibly happy. We're moving to standard rules with standard data and standard reporting. You should know where you are with us all in a consistent fashion. So this should be a modernising joy to the global business community. Any important aspect that you think we might progress further on to make you even happier still?
So, Angela, I don't want to disagree with you in front of this group, but I actually am happy to hear from my fellow speakers the level of engagement and the detail, the command of detail, because I know that this is a special project for you. And I wasn't in Amsterdam, but I can sense the momentum on this stage. That Amsterdam was a big success, so congratulations, and credit also to the OECD for organizing that and for you to host that. And I wasn't there, but I'm here today representing BIAC. Again, I'm head of tax for the U.S. Council for International Business. So it's a U.S. organization, the U.S. member of BIAC. I manage our tax committee, which consists of 550 members, and so my comments today are pretty much BIAC comments, not specific to the U.S. because there's on the issue of tax certainty and Pillar 2 or GLOBE. a lot of these points represent a lot of intensive work that our company members have been doing on this, across the BEAC jurisdictions. As I said, some of our key members are active in the BEAC Pillar 2 Business Advisory Group, and I can assure you that these and other U.S. members are working diligently to comply with GLOBE in the relevant jurisdictions. I cannot understate the importance of the FDA's ongoing focus on tax certainty for GLOBE. In a perfect world, we believe that GLOBE would be a regime that by design would be applied easily, fairly, and consistently across jurisdictions. There would be no need to commit taxpayer and tax administration resources on an ongoing basis because there would be no inconsistencies emerging in implementation at the jurisdictional level. The implementation experience of our members, however, calls for a dispute resolution mechanism that is specifically designed for GLOBE conflicts. Such a mechanism is needed in addition to the stated plans for peer review and an ICAP or ICAP-like option for taxpayers to consider. In our view, the ongoing discussion on the use of a permanent GLOBE safe harbor, including a streamlined ETR calculation for high tax situations, is a tax certainty matter, and I feel obliged to mention it here. Safe harbors benefit taxpayers and tax administration by freeing up resources otherwise expended to get to the same result through a much more resource-intensive path. Safe harbors should be designed to be easy to apply, and they should be applied wherever possible as GLOBE experience is made going forward and more opportunities emerge. BEAC members are encouraged to hear that the discussion on permanent safe harbors is progressing. We at BEAC consider this to be one of the positive aspects of our very lengthy engagement between the OECD and the business community. There's certainly more cooperative opportunities like this, and the business community is generally prepared to advise the inclusive framework and the OECD on demand and in the time needed. So let me list here 6 specific points in response to Angela's question. First, there is a need to preserve the consistency of the GIR and its content and its filing location. We are concerned about some countries pushing for additional data points in the GIR in certain specific cases. Our members are working on the assumption that the GIR format is final as it derives from the GLOBE rules. It is too late in the process to change the GIR format in our view. Next, to align on a standardized QDMTT return, which mirrors the GIR format. The QDMTT may be a domestic tax, but the tax interaction with and implications for taxpayer filings and payments in other jurisdictions mean that the slight variations in QDMTT returns result in disproportionately more complexity for taxpayers that are filing in multiple jurisdictions. Third, there's a need for a robust peer review process. Any departure by countries from the GLOBE rules in the implementation of IIR, QDMTT, and UTPR will make the GLOBE implementation project immensely more complex for businesses. The peer review process should ensure that all countries are strictly following the AG guidelines and the rules. Fourth, there is a need for efficient exchange of information mechanisms. With multiple countries enacting GLOBE for 2024, there are approximately 18 months until the first GIR is due. A central location for taxpayers for reference would significantly reduce the administrative burden in the near term as MNEs ramp up their compliance. There is a need for automated information exchange of GIR data between tax authorities and the elimination of the need for taxpayers to notify local tax administrations for each jurisdiction regarding where and when they file the GIR related to the in-country activity. Similar to the country-by-country XML system, the business community would appreciate such an approach because it would foster interoperability and help to prevent disputes between taxpayers and tax administrations and among tax administrations. Fifth, we would like to see the OECD set clear timeline-based expectations for jurisdictions to adopt administrative guidance into domestic policy. Taxpayers are seeing fragmentation caused by the uneven uptake of administrative guidance. If jurisdictions take varying approaches to onboarding administrative guidance, this could lead to different rules in different jurisdictions and yield disparate top-up tax calculations. We recommend a more coordinated and cohesive approach to developing a more consistent framework, including clear timing of implementation. 6, provide for a consistent and mandatory approach to any GloBE adjustments. The GloBE rules provide that if a taxpayer has an adjustment that decreases its tax liability under the rules, then the taxpayer must redo the calculations from prior years. However, if the adjustment increases tax liability under the rules, the adjustment is included in the same year as the financial accounts. And it would be helpful if there's a consistent approach to adjustments where they increase or decrease tax liability. We have a strong preference for accounting for all prior year adjustments in the year they are recorded in the taxpayer financial accounts. So, in closing, the previous suggestions on enforcing consistency across jurisdictions have an important role to play in dispute prevention and overall tax certainty of GloBE. The fewer discrepancies between jurisdictions, the less likely it is for disputes to arise between taxpayers and tax administrations and among tax authorities. The absence of a dispute resolution framework will likely increase complexities related to the filing and payment obligation for the GloBE rules. A dispute resolution framework should include the option for a taxpayer to bring concerns before the OECD, or at a minimum, to request guidance if the dispute arose from differing interpretations of the GloBE rules and/or the commentary. Further, the jurisdiction of the ultimate parent entity should be involved in any dispute resolution procedures, even if the jurisdiction of the ultimate parent entity does not adopt any of the GloBE rules. Of course, I had to say that. So again, I want to commend this group and everybody in this room for the commitment, the sincere commitment, if not enthusiasm, for getting this right on the tax certainty front. And I hope that business can continue to be helpful in pointing out opportunities to make to increase the performance of tax certainty, because it is really the businesses that are learning first and foremost where the gaps are as they diligently endeavor to comply on time. Thank you.
Wonderful, thank you so much. That really helpful food for thought there. I'm really grateful, and it underlines the importance of us taking feedback and staying connected to businesses, because in reality, implementation is not just going to be at the point of go live. Implementation is going to be in the early years as we work our way through the first cycles. And I absolutely, I can sort of, from a desire point of view, I can completely see can all countries move at the same time, at the same pace, and deliver everything in a very consistent fashion. I think one of the things that I've learned in my few years working across this esteemed group of colleagues is that actually all the tax jurisdictions are in some quite different starting points. We all face different challenges. And I think how do we work with that? How do we understand that we're all in different places? How do we help MNEs to navigate that, as opposed to hoping that perfect will be we're all in a perfect position on a particular date and everything is going to be there? Because I think the reality is that isn't going to be where we are. And I think it's about all of us working together as a community with global business to understand that and then work out how we keep the lines of communication open so that we can move and support each other. But I think our ambitions are shared, and success is for business and for global tax authorities to get this right. So we're with you, and you have our support as a group of countries here. So thank you for your contribution. So we have 7 minutes left, Gerasimus, for your thoughts. So I'm hoping you'll be able to give us your wisdom and your final thoughts in our 7 minutes. We talked about this from an individual country's perspective, but obviously the EU plays a major role as an organisation in how we drive this forward. So are there any sort of EU-related aspects that you would like to share?
Thank you very much, and thank you for inviting me here. I want to congratulate both as the European Commission Director General, but also as a Greek. I want to congratulate I think George Pitsilis is here for hosting this event for the OECD, for organizing a REACH program. I'm sorry I could not be here earlier and listen to you. I understand you had, I've seen from the program, and my colleagues are here for the full program to see a number of important events. I have a difficulty to stick to my speaking points because I come from an early breakfast this morning, 1.5-hour breakfast with 25 CEOs from the chemical industry, from Exxon, Dow, Chinese, Japanese, and European, Solvay, BASF. And when I saw the slide of Akim, he says, what is still in the works? And I would say a lot of tariffs, you know, so it's a tariff work in the works. We have a lot of challenges outside, let's say, the Pillar 2 that will test a little bit our international cooperation and commitment. We hope, we don't know how it will happen, but we do have a lot of externalities, new externalities coming in and framing our work. Then a second one, by coincidence, Akim, but the second aspect in Akim's slide, it was, or not in his slide, but in your comment, you says Pillar 2 is not transactional. I will not comment, but I think it is a word that it is discussed a lot, against the background of the new U.S. administration. So let me see now. I think from the U.S., from the EU perspective, I think you probably know, all those of you also who come from outside Europe, that we have a new European Commission, let's say, to start, hopefully on the 1st of December. We have a new European Commissioner for Taxation, Wopke Hoekstra, and he is already at the moment a Commissioner for Climate. And we will have also a second Commissioner who is responsible for simplification for businesses, Valdis Dombrovskis. So we will have, looking at the tax area from two angles, both from simplification for businesses, big businesses and SMEs, but also from driving forward the agenda. So in the first part, it's very prominent in the beginning of the new European Commission agenda, the discussion about simplification, rationalization of reporting obligations, burden reduction. This is one of the big priorities of the new von der Leyen Commission. And we expect to take a lot of initiatives already in the 2020-25. I think the last few years, despite the unanimity rule that we have in the EU, we made significant progress in adopting a lot of initiatives to enhance the data exchanges, combat tax avoidance, prevent tax evasion, and adopting Pillar 2 as one of the first collective, let's say, jurisdictions with all of our member states. And it is already a reality, Pillar 2 in Europe. It applies as of the 1st of January 2024. And, member states have passed all the necessary legislation, along with a large number of other jurisdictions around the world, not the US, but other jurisdictions around the world. And there is a lot of work done at the member state level, the tax administrations, to make it happen. So I think we are very keen to continue despite the geopolitics, on this. It is a reality, it is low now, and we are looking on how to make the administrative steps simpler. So against this background, and despite the fact that we are in a transition in the European Commission, on the 28th of October, just a few days ago, we adopted a proposal for a directive that amends the Directive on Administrative Cooperation, the so-called DAC. So we have a DAC 9 proposal to make it easier for MNEs to fulfill their filing obligations under Pillar 2. We have made a proposal that allows information exchange in a standardized form by submitting the information returns once in the European Union in full compliance with the OECD rules, and therefore we plan to reduce the number of reports from around 180,000 reports if each company filed information separately to approximately 4,000 because we have a common reporting standard and filing only once within the European Union. So this is a substantial reduction, 45 type reduction. So I think this is a tool and this is also let's say a demonstration of our commitment of both making Pillar 2 work but also alleviating a lot of the significant administrative burden who came with Pillar 2. Beyond that, I think we need to pay a bit more attention of the additional guidance. I think we need tax certainty, and I think we need to make sure that you know, certain issues we solve with guidance, certain we solve with peer pressure, and I think I can align to most of the 6 principles that Rick mentioned here. We will go a step further. This will take probably a bit more time than the first 100 days on how to streamline further our reporting obligations. We have a big evaluation exercise on the Anti-Tax Avoidance Directive and the DAX, and we will come up, let's say, with a proposal to streamline the overlaps and make sure that the Pillar 2 it's also used as a catalyst for further simplification of our reporting obligations. We will try to make sure that all the gray corners between the full consistency between the existing reporting obligations and Pillar 2, and Joaquin just referred that this code word about this decluttering. Everybody speaks about this. I think we have to do it right, and so I am telling to my political masters that it cannot be done in 100 days to be done right, but we will see. I have a lot of pressure to do it quickly, but I think we need a bit more time, and notably to get the feedback of the business community to have a proper consultation to do it right, but I think it's something that is extremely necessary. So I think Pillar 2 is a big achievement. We have leveled the playing field with a minimum 15% effective tax rate in Europe. By itself, even within Europe, it's a big achievement that we have done it, and internationally I'm very glad to hear that we have a big buy-in from countries worldwide, and I think we need to keep working together to make it work.
Wonderful, thank you so much. And again, a really great example of more of the moving parts that move around and adjust as we move forward with this great shared endeavour. So thank you so much to my panel. I'm very grateful for your thoughts and contributions, and obviously a demonstration of the massive amount of work that is on the go. So that brings us to an end of this session. So thank you for your attention, and Sivela will come to the stage next. So thank you so much, everybody.
Thank you, Bob. Before beginning my presentation, I would like to thank my great colleagues for hosting the meeting and for their warm hospitality. We are all enjoying our stay in Athens. So, thank you for giving us the opportunity to provide an introductory presentation. I am pleased to share Japan's experience and look forward to listening to views and experience from the delegates. First of all, I'd like to mention about our published organizational mission to help taxpayers to properly and smoothly fulfill their tax duties. This mission governs our organization's entire activities and operations, and dispute prevention can be seen as one important element of this mission. To fulfill the mission, the NTA developed various activities and programs that provide tax certainty for taxpayers and accordingly promote dispute prevention. For large-size M&Es, the NTA introduced APA in 1987. Since then, the NTA has been actively operating APA program in full cooperation with tax treaty partners. This initiative has successfully prevented disputes in the area of transfer pricing. Interest in APA is growing in Asia-Pacific region. 2 weeks ago, I participated in the SGATA annual meeting hosted by the National Tax Service, Korea. In the meeting, many commissioners in the region pointed out that APA is an effective mechanism for dispute prevention. Well, I stop here and let my deputy, Mr. Nakamura, explain our experience further.
Thank you, Commissioner Oka, and hello to everyone. Following my Commissioner's comment, I would like to present our efforts for tax certainty with some slides focusing on our APA program. As Commissioner Oka stated, NTA carries out a number of activities and programs to fulfill our mission, and they also contribute to promotion of tax certainty. Page 4 shows some examples of such activities and programs. They cover a variety of taxpayers and are designed and implemented responding to taxpayers' needs. For instance, JCAP, or the Comprehensive Assurance Program of Japan, was developed as an effort to promote tax corporate governance. In our dialogue with business community, they often show us their concerns that uncertainty for tax treatment of unprecedented transactions is a key risk to carry out such transactions. To address their concerns, JCAP was launched for certain qualified taxpayers. Upon their request, we provide clarification on the tax treatment of specific unprecedented transactions within 45 days. This program provides tax certainty for taxpayers, accordingly prevents disputes. It looks like ICAP, but it's a domestic measure. This page summarizes how the APA program works in Japan. Since its introduction in 1987, it has been serving as a structure to provide tax certainty to inbound and outbound businesses. As a pioneer of APA, I am very glad to see that the OECD launched a new initiative on APA today to make the standardized APA statistics available in public. In 2023, as in the slide, we held APA consultations with nearly 30 tax treaty partners and resolved 158 cases. And last year, we received 167 APA requests. A quarter of them are new requests, and so the majority are the renewal ones. In contrast, the number of MAP requests is relatively small, with 45 cases, including 7 non-TP adjustment cases. This shows that our APA program successfully serves to help us move from dispute resolution to dispute prevention. By the way, I would like to say that we do not have, between Japan and the US, we do not have MAP cases. All of them are APA cases. This slide, by this slide, I would like to explain why APA is necessary. Tax certainty is one of the key elements of global business activities, and many MNEs are trying very hard to minimize the risks arising from cross-border transactions by transfer pricing analysis and transfer pricing documentation. However, they cannot fully eliminate transfer pricing risks posed by any jurisdictions. Thus, there is a strong demand from MNEs to make APA requests. APA is attractive for tax authorities as well because it is a more favorable approach to provide tax certainty with less resources and more cooperative relationship with taxpayers. Let me compare MAP with APA in terms of time to close the cases. The minimum standard of BEPS Action 14 requires competent authorities to resolve MAP cases within 24 months. But in reality, as shown at the bottom of the slide, it often takes more time. Considering time required for audit process, subsequent arbitration, and domestic relief, the entire time to end the disputes will be very long. APA process requires less resources while providing more tax certainty. In fact, our APA team has been concluding many APA cases within 13 months after receiving APA requests. In addition, we have learned the jurisdictions that have made adjustments tend to persist in their original positions through MAP process. But APA process allows more neutral and harmonized approach from the beginning in full engagement and cooperation with the relevant tax treaty partners and taxpayers. I would like to emphasize that successful APA progress needs appropriate and active engagement by taxpayers. So we encourage taxpayers to carefully assess and manage their own transfer pricing risks and use APA wisely and thoughtfully. Also, I would like to stress the successful APA program expects all relevant competent authorities to work together in an open-minded and flexible attitude to find a well-balanced solution. Otherwise, APA might be the place for disputes among competent authorities. I would like to finish my presentation by thanking my colleagues from our treaty partners in the floor and our taxpayers for their dedicated cooperation to enable us to move from dispute resolution to dispute prevention. Thank you for your attention.
Thank you all for the opportunity to talk about tax certainty today. I'm going to try, my goal for today is to try to get us to looking forward, looking ahead, and continuing on the tax certainty agenda and taking it new steps forward. But if you'll bear with me, I am going to revisit a couple of things that have already been touched upon today just to set the stage for the forward-looking comments. And first I wanted to I just want to remind us all why tax certainty is so important. I also want to talk about, kind of summarize where we are on the tax certainty journey presently, and also what we're hearing from business. And lastly, I'll get to a recommendation on a way forward, albeit in a very broad brush, because I think this is work that's going to have to go on and involve all of the experts in our respective tax administrations. So first of all, why is this so important? It's been touched on today. Manal started off talking about all of the reasons that we have tax treaties to encourage cross-border investment and economic growth in all of our jurisdictions. So I just wanted to take a moment to remind us all that all of us in this room, we have an important role in cross-border trade and investment through the administration of our tax treaties. And this requires a significant investment of all of us in terms of human resources, training of our human resources, to allow our competent authorities and our tax administrations more broadly to effectively and efficiently cooperate to solve all the many complex questions about who taxes what, who should tax what in our interconnected economies. And against this backdrop, the tax certainty journey, I think it began well before BEPS with the creation of the MAP Forum and projects like MeMap, but we all tend to go back to the BEPS project and Action 14 that was implemented as part of the political solution to help resolve and prevent disputes in a timely, effective, and efficient manner. And we saw, the progress in the statistics earlier this morning. Moving on from the BEPS project, this group committed to the tax certainty agenda in Santiago in 2019. Do I have that right, Bob? Yep. Okay. And an outcome statement was issued that included a commitment by this body to ramp up the work on tax certainty, which launched the tax certainty agenda and expanded our focus to include dispute prevention as well as resolution. So now I'd like to turn and recap some of the progress that has been made, and it's been touched upon by many other speakers already this morning. Since 2019, we have come a long way. We've had a lot of major accomplishments. We've had the significant improvements to MAP and the maturation of the MAP Forum. We established the International Compliance Assurance Program, or ICAP, as a permanent multilateral risk assessment program. We've published manuals on the handling of multilateral MAP and multilateral APA cases to share best practices, learnings, and experience with each other. We've increased our joint and coordinated audit experience. Some of us have more experience than others, but as a group, we've collectively increased that. We've engaged on multilateral work about compliance, cooperative compliance programs, and we've worked on rule simplification and safe harbors as part of the Pillar project, Amount B being an example of rule simplification. But despite these significant accomplishments to date, as we saw from the statistics this morning, and with the remaining very high levels of the MAP inventories, there's still work to be done, and there are still challenges to be overcome here. Each of us has many competing priorities that require our focus and our resources, and many of those have been touched in all of our transformation conversations today, our IT systems, our workforces, etc. Also, another challenge that presents itself in the tax certainty goals is that sometimes our workforces are hesitant to reach resolutions, either in MAP or in audit, for either lack of empowerment or fear of reprisal. And that's on us to, make a change there so that we can move forward in the dispute prevention agenda. And sometimes we have domestic rules, either substantive or procedural, that present obstacles to preventing disputes and resolving issues timely. And of course, new and existing complex rules also present challenges. We just had the whole panel talking about the challenges presented by Pillar 2. But the pillars are not the only new complex laws we're all faced with. It's just the biggest ones of the day. And I know we have business in the room, so I'll say taxpayer behaviors also complicate the dynamic here. When taxpayers do not engage with us in a cooperative, transparent manner, that also presents a challenge to tax certainty and achieving earlier prevention and quicker results in resolution processes. So these dynamics are the reasons why in Santiago this group recognized that we can only be successful in delivering on the wider tax certainty agenda if we advance on a comprehensive and interlinked agenda. And these are all dynamics why we still have more to deliver here. I think it goes without saying that tax certainty remains as important now as it was in 2019. The pillars, I need say no more than the pillars to explain that. But we also continue to all enact new legislation in our jurisdictions, our policymakers, and we continue to hear from business that stability remains critical for their success, and stability requires tax certainty. So I wanted to just summarize some of what we heard from business this summer at the BIAC OECD Tax Certainty Roundtable. We got substantial feedback from business, and it was across a variety of aspects of how we work. Business is telling us that in order to foster a more collaborative and trusting tax certainty landscape, we need to have more open communication, reasonable information requirements and filing positions, earlier dialogues, proactive engagements, and more certain outcomes. BIAC also made suggestions about the creative combining of our tax certainty tools and greater use of rule simplification and safe harbors. And they also recommended a number of audit best practices that can pave the way for more certain outcomes. So all of this points to the fact that, or it suggests to me at least, that tax certainty and dispute prevention starts with our domestic rules and our domestic processes and practices and our ways of working with taxpayers, and then it extends to our ways of working together under our tax treaties and our information exchange agreements. It is simply our responsibility under the treaties and in our collective interest to foster taxpayer trust in our administrations and create stable environments for economic growth. So finally, getting to the most important point, what can we do as tax administrations to further advance the certainty agenda, and what is the way forward? I don't have all the answers today, but I wanted to paint with a broad brush things that we all should be thinking about and maybe make some suggestions for some work going forward. First of all, we need to reinvigorate our commitment to tax certainty thinking beyond the specific dispute resolution tools and focus on dispute prevention, starting in our domestic processes. We can educate and empower our workforces about the importance of tax certainty and train them on all the tools to use to reach principled outcomes. We can review our processes and procedures through the tax certainty lens to remove our domestic obstacles and disincentives. And we can work to provide more and clearer guidance to increase taxpayers' understanding of all of the complex rules and how to apply them. That's something we talk about a lot in the US with a lot of complex rules and processes. Trust has been a big theme throughout this plenary, and we can focus on building trust with both taxpayers and with each other. We should use the insights and tools our trust teams, led by James Dunstan, that they have developed with project leads from Singapore, from Canada, and from Sweden. They've given us some new tools and insights. We should use those to incentivize taxpayers to engage with us cooperatively and transparently. and we should continue the engagements with business, both here multilaterally as well as in our own jurisdiction, so that we can, I can't say it, Cezanne, but trying to channel the Dutch concept there that I heard about earlier, so that we can build processes and procedures at the beginning that work for both tax administration and taxpayers, and that will build trust. And we should focus on building trust with one another through our many multilateral engagements and efforts. I wanted to focus on one of the statistics Sandra showed us earlier was the number of MAP resolutions, or the percentage of MAP resolutions that fully eliminated double tax. I think, Sandra, it was something like 62% averaging transfer pricing and non-transfer pricing MAP cases. And, you know, thinking back, 62%, there's still room for improvement there, but I think that demonstrates that we can leverage our good working relationships beyond MAP to achieve meaningful results. Something else that I think we need to challenge ourselves with is to identify data and measurements to capture and evaluate the costs and the benefits of our tax certainty efforts. Dinner last night revealed to me that some of us might be a little farther along this what do I want to call it, journey than others. Australia has some very interesting statistics, but many of us probably need to do a better job capturing those, because many of these tax certainty efforts, they're both, it is a compliance touch, but it is also a service touch. And we should be capturing that to make the case, again, going to the winning the argument, to make the case that funding for these endeavors is important. And of course, we must continue to improve MAP, APAs, and the ICAP program, and build on the feedback that BIAC shared with us about, you know, some creative new ways to use our tools, and also to use them as we embark on the Pillar 2 journey. So putting this all together, I would recommend that we need to work together to identify best practices that balance both compliance and dispute prevention goals. And indeed, as part of our work, at our transformation work at the IRS, we have publicly committed to expanding and improving our tax certainty and issue prevention and resolution options for taxpayers, and that seems to fold in well with the transformation theme of our plenary here. So finally, meeting here in Athens, Greece, reminds us to reflect on the history from the past, and I don't see any of my Greek friends right now, but leading up to the Greek Revolution, the lack of predictability and fairness in tax policy and administration sowed the seeds of content. That's something we Americans have in common with our Greek friends. But this historical context highlights the powerful role that tax certainty or lack thereof can play in shaping stable societies. So thank you very much. Bob, are we moving to table?
Yes, thank you. Thank you very much. I want to thank the panelists for giving us a great overview and hopefully reestablishing our commitment to working on tax certainty and the importance. And it's got many dimensions to it, as we've talked about: simplicity, stability, and we all contribute to some of the complexity and some of the instability. And so I think with something here, and I'm speaking about us as tax administrators, the business community, and so we have an opportunity to really examine how we work together with each other to try to drive towards the tax certainty. So we've got lots of challenges ahead of us. I think we have a commitment. And at the core of it, there is an element of trust, as you said, Jennifer, that really is key. If we can get establish more trust in those various relationships, I think that's going to help us a lot. So with that, what I'd like to do now, we'll go to have table discussions, as mentioned, maybe 10, 15 minutes, get some ideas down, put them on paper, they will go forward. And then after that, Jennifer has agreed to do a round of 10 minutes to just pick up some of the really key points that have come up, and then we will close the session. But obviously it's going to be a dialogue that we keep having for a long, long time. So I thank you to the panelists.
Again, I'm going to try to get table feedback on each of the questions, but we're working under a compressed time frame. So business, would you like to comment first? Okay. Okay, business, you're supposed to cooperate with us in a timely manner.
Thank you very much, and thank you very much on behalf of business to be able to be here and to participate. Really appreciate the opportunity. In terms of the question about the priority that businesses place on achieving tax certainty, you won't be surprised to hear us saying we put a huge amount of focus on getting that certainty up front. Understanding what's actually happening in terms of how you're going to be treated really makes a difference in terms of the amount of investment that businesses can put into a country, and having that level of certainty allows us to make those kind of key decisions that are there. In practice, the APAs are a great opportunity, and it's really good to see the statistics improving. I guess the question we've got is the time it takes for an APA to come through. If we can get this done much more quickly, then we've got the opportunity to benefit from that certainty and to put more investment behind it. The idea of that certainty should be opening up those kind of opportunities. If we look to the second kind of question, just in relation to dispute prevention, one of the messages we heard over the last 2 days was a move from, if you like, dispute resolution to dispute prevention. And indeed, I think one of the key things from a business perspective is trying to make sure that that also features into the KPIs of the tax auditors. Because if we do this right, the amount of audit yield will go down, but the actual amount of tax receipts will go up because there'll be greater certainty and greater investment. So thinking about KPIs that are out there, key performance indicators, which is about audit yield rather than revenue yield overall, I think needs to be taken into account as you work your way through. Then finally, on question 3, just in relation to the FTA, I think there's a huge opportunity for the FTA to be able to bring out best practice, a particular handbook that allowed us to understand how tax audits are managed, how tax audits are undertaken, how the KPIs that we mentioned before, I think those are critical, and I think there's a real benefit of being able to share best practice across, and I know business would be very happy to engage in participating on that side. Thank you.
Thank you so much. And that the KPI comment brings out some of what I was thinking about with the measurements and the statistics, because that is sort of inverse. And as Edward told us earlier, what gets measured gets done. So, okay, any tables that would like to, oh, here we go.
So Jennifer, thank you. And at our table, we had a great discussion around certainty, and really wanted to draw out 6 themes that came out from our discussion. The first is maybe a little bit controversial, or maybe saying the quiet bit out loud, and which is that tax certainty for a tax administrator cannot be certainty for business that aggressive structures or aggressive transfer pricing are protected. And so we need to, as administrators, we cannot have that position. But the second point was around certainty, not for everything, but for the key issues for your jurisdiction and your economy, to focus on certainty on those areas. The third was to think about pre-filing certainty. So how do we give business certainty before filing, which can include certainty as to the stance of the administrator. What is likely to upset you? What is likely to make you happy? Can you give that certainty to business before they file? The fourth point goes to the measurement point. If our auditors are only measured on audit yield, they'll do lots of audits. So how do we find a way to reward them with financial metrics which recognise their work in preventing things going wrong, but also when they prove that everything was done right? So if it's not a fail, it's not a strike rate problem, they've actually proven that the right tax was paid, that's actually a success. The fifth point was a point around peer certainty, that often business just wants to know that they're not in a worse position than their peers. So how do we provide information to business about how their peers are behaving? And probably the last point to draw out from our discussion was, how do you give taxpayers certainty around process and timing? Because actually being uncertain as to when they're going to hear back from you is actually one of the most corrosive forms of uncertainty.
Thank you, and we're going to look to you guys to help us with those measurements. Yes, Lisa.
Thank you. Now, take on board all other points made. We just wanted to add one which we thought was perhaps something a little bit unusual. We're very much in favor this table of tax certainty and early tax certainty. I think the early part we wanted to stress, and I'm talking Czech, Bulgaria and Chile here. We had this discussion and we agree. We also wanted to add to the tax certainty the urgent issue of trying to set time limits on tax adjustments so that we don't have some jurisdictions making adjustments 10 years down the line. And we as tax administrations have to start looking at things that we actually don't have any paperwork left on, because in our jurisdiction, this was like, it's all prescribed. So we wanted to add to this tax certainty issue, the tax certainty for taxpayers and for tax administrations, to actually set some time limits on adjustments. The rest, we were all in agreement with paragraph 3. Thank you.
Thank you. And when it comes to timing, that's where our partnership with business is very important, right? Edward, I see.
Thank you. One of the things that is a flaw, a fatal flaw among us, is we tend to preach to the converted. We are more than adequately persuaded about tax certainty, as if it is self-evident for businesses. And I speak as a former CEO of a multinational. Business arbitrages any opportunity they get. So they thrive on complexity and they thrive on uncertainty. They make money out of it. So we mustn't assume that businesses want certainty, or assume that when they want certainty, it's for the same reasons that we want it. So that's very, very important. The second elephant in the room is that there's a profession out there that makes money out of uncertainty, out of tax complexity. We found that when we provided tax just happens for individuals, we had all of the practitioners coming at us saying, you're taking away our work, right? You're disintermediating us, you're making us irrelevant. So I think I just throw that in the mix because we have convinced ourselves that tax certainty is self-evident, and I think from our perspective it is. On the second question, we said all of the above. We cannot underestimate the tremendous resource intensity it is to build the capacity to enable our auditors towards certainty. And so I think I agree with Jeremy. If you walk around with a hammer, every problem presents as a nail. And so our auditors are only skilled to raise tax assessments. They're not there to resolve uncertainty. On the last question, I think as the FTA, I would strongly encourage that we engage more actively with businesses, with great respect, not with business associations, but with businesses, and understand their motives, their perspective on what we think is a value proposition. And I think may not change our perspective, but definitely will enrich it. And then lastly, and I've asked this at SIAT when I was there earlier this year, I asked it at our FTA Bureau meeting earlier this year, where is the evidence-based feedback that says cooperative compliance works, that says APAs work from the perspective of business? So I think as an FTA, we can do a lot more evidence-based research to make the case better to businesses, because business are in the business for maximizing their return to shareholders, maximizing their bottom line, and they would not stand back if there's a clear business case. So maybe we should make a business case better, and I think that's work that the FTA can definitely do. Thank you.
Let's get right into it here. We've seen the map statistics presented earlier by Sandra and show us that while we're making progress, there's always room for improvement with respect to MAP and APAs, and also we just acknowledge the hard work that everybody is doing. We're also celebrating the first time that the focus a bit more on dispute prevention through APAs as compared to MAPs in the general theme of tax certainty that we're here talking about today. So let's start by presenting the awards, and there'll be slides coming up on the screen. They're being presented today in 6 categories, 5 of which relate to a different aspect of managing the MAP program, and the last award relates to the APAs as we have discussed earlier. So the MAP awards are in the following 5 categories. First, speed, rewarding the jurisdiction that needed the least time in average to close its cases, speaking to the timeliness issue we just spoke of. Age of inventory, which goes to the jurisdiction with the smallest percentage of pre-2016 cases in its end inventory. Caseload management is the award given to the jurisdiction that best managed its total caseload, being the number of cases in the starting inventory plus the cases started during 2023. Cooperation, the category that rewards the jurisdictions that worked well together, and improvement. This final award is given to the jurisdiction that showed the most improvement in resolving MAP cases with positive outcomes. And then the new APA award recognizes the efforts taken to move from dispute resolution to dispute prevention by looking at the ratio of end inventory of APA cases to the number of transfer pricing MAP cases. And I think only a room full of tax geeks could pull apart that statement and understand why that's important, but it is an interesting statistic. So let's move to the next slide, which is the average time to close the MAP cases, the speed award. This is the award, as I said, for the best average time for transfer pricing cases, and there is an award for other cases. And the winners are Netherlands for transfer pricing cases, and Australia for other cases. So let's have a round of applause for our big winners. Now let's see how we got to these results for the average time. For transfer pricing cases, we looked at the jurisdictions that closed at least 50 cases, and we see that 2 jurisdictions closed their cases on average in less than 24 months. It took the Netherlands around 22 months, Germany around 23.3 months, and Switzerland rounds out the top 3 with an average closing time of 24.5 months. For other cases, we looked at jurisdictions that closed at least 20 cases. The top 3 consists of Australia with 7.3 months, Ireland with 11.1 months, and Denmark, which closed its cases on average within 15.1 months. Netherlands, congratulations for this achievement, and especially since you have won this category in back-to-back years. Now, in each case, or not each case, but in cases where we have had a reaction from the jurisdictions that won, Sandra's just going to read out short messages for respecting those jurisdictions. We will do one for the Netherlands in a few minutes because we're going to combine it with another reaction. But Australia, let me say the congratulations for your achievement, and Sandra will now read out a brief message prepared by the Australian Competent Authority team to reflect on this success.
Thank you. Australia, being a strong supporter of the OECD FTA MAPS forum's work, and they remain committed to their MAP obligations. So what they did was constantly seeking to improve their capacity and capability and efficiencies in their MAP administration. And in particularly, they have focused on processing less complex matters in shorter time frames. And so they are pleased that their efforts have resulted in an average time of completion of 7.33 months for other cases, non-transfer pricing cases. And so they also want to thank their treaty partners who have worked together with them to achieve these outcomes in the shared MAP cases.
Thank you for that. Thank you again, Australia. Let's move to the next category, which is the age of inventory, which again goes to the jurisdiction with the smallest percentage of pre-2016 cases in its ending inventory. Jurisdictions with more than 100 cases in inventory were taken into consideration. And the winner is Canada. What a fabulous jurisdiction. Let's look at those results once again. In the top 5, we start with around 3.2% of old cases left in inventory. Number 3 is Switzerland with around 2.2% of cases. Number 2 is the Netherlands with around 1.4%. And Canada now has around 1.1% of old cases in its inventory. Well done to the Competent Authority team in Canada. I'm very proud of them. And I believe this is the 3rd year running that Canada has won this award. So Sandra, again, could you read the reaction from our Competent Authority team? Oh, sorry, that's another case, sorry, like the Netherlands. Canada's going to receive another award. I'm practically blushing, but we'll come to that reaction soon. You see why I like doing these. The 3rd category is caseload management. The award is given to the jurisdiction that best managed its total caseload, which is determined by comparing the number of cases closed with the number of cases that it must deal with. There's an award for large MAP jurisdictions with more than 100 cases left in their inventory, and one for jurisdictions with a moderate inventory, between 20 and 100 cases. And the winners are, for the large-sized inventory, Netherlands, and for the medium-sized inventory, Norway. So let's have a big hand for Netherlands and Norway. Now let's look at those results. The ratio we're looking at is designed to compare the cases closed in 2023 with the total caseload during that year, calculated using their starting inventory and the new cases started during the year. For the jurisdictions with a large-sized inventory, we see that third place is Portugal with 46%, second is Switzerland with 47%, and in first place, the Netherlands with 52%. For jurisdictions with a medium-sized inventory, Australia is third with 45%, South Africa comes second with 47%, and Norway is first with 54%. Netherlands, once again, my congratulations. And Sandra, you can now read that Netherlands reaction.
Yes, so Netherlands gave us the following information. The abbreviation of MAP includes the word mutual agreement, or in French, the process is called procédure amiable, which means friendly procedure. So these French words actually show what is at the heart of international tax dispute prevention and resolution mechanisms, namely that treaty partners via an intergovernmental procedure strive solving cases of double taxation. And this based on mutual cooperation, trust, and the willingness to compromise to achieve a result that serves a correct treaty application and relieves taxpayers of double taxation. And so in that regard, the Netherlands is grateful to be awarded with these awards, which is a recognition of the steps taken since 22 for a dedicated map team. But however, as alluded, it is not a one-person's show. It's only because of the close cooperation with their international colleagues that they were able to do so. And so they therefore want to thank the map partners for the cooperation and look forward to continue to work together in preventing and resolving disputes.
Thank you for that. And then let's turn to Norway. And well done, Norway, on this one. And Sandra, again, you can read the reaction.
Yeah, and so Norway also, and I'm a bit blushing now, thank the Secretariat for all the work they have put into BEP Section 14, the MAP Forum, but also the MAP trainings. And it's thanks to the trainings and their treaty partners, without close and well-functioning cooperation, this would not be possible. And so through the focus of strengthening the competency of their MAP team, they were able to deal with MAP cases more efficiently. So this award is such a great recognition of the hard work done by a whole team, and so a big thanks to everybody in the Norwegian MAP team.
Thank you, and congratulations, Norway. Let's move to the next category, which is cooperation, which is what we're all about here. So this category recognizes jurisdictions that work particularly well together, that reach the most agreements as compared to their total caseload, calculated using the number of cases in its start inventory with the cases during 2023. The map, as we know, is not something you can do by yourself, except for the cases where you grant unilateral relief, of course. Like they say, it takes two to tango. So here we have an award for those jurisdictions that manage their caseloads well. And the winners are, for transfer pricing cases, Canada and France, and for other cases, Austria and Switzerland. So congratulations to those jurisdictions. So let's look at those results. So here an agreement score was designed to compare the cases fully resolved in 2023 by a pair of jurisdictions as compared to their total MAP caseload. I need to clarify that only jurisdictions that had more than 20 joint cases were taken into consideration, and that this only relates to its cases received after January 2018, as we do not have information on jurisdiction by jurisdiction basis for the old cases. For transfer pricing cases, Italy and the United Kingdom managed to close a substantial portion of their joint caseload with an agreement fully resolving the taxation at issue, coming in third with an agreement score of 76%, not percent, 76. France and Sweden did a little better, around 79, coming in second, but it's Canada and France that made the best pair. They managed to close a majority of their caseload with an agreement score of 86. For other cases, Germany and the United Kingdom did well with an agreement score of 66. United Kingdom did better with Australia, reaching an agreement score of 67. However, Austria and Switzerland closed almost all joint cases with an agreement score of 83. So for transfer pricing cases, Canada, once again, and France, congratulations. And Sandra can read the reaction from the Canadian Competent Authority team now.
So for Canada, the CRA is very honored to have received this recognition from the OECD, and their success in the categories age of inventory and best cooperation with France stemmed from their efforts in building resource capacity to successfully resolve a large number of aging cases. And Canada would also like to highlight the efforts of France in building its own capacity and being committed to resolving cases in a fair and principled manner. Collaborative and principle-based approach are keys to their recent success with so many of their treaty partners, and so Canada says they're greatly honored.
Thank you. And spoiler alert, we'll read the French reaction because they're going to be winning another award later, so we'll combine that. For other cases, Austria and Switzerland, please accept my congratulations as well, and the Austrian and Swiss teams have shared their reaction with us.
Yes, and they shared a joint comment on this one. So they are very honored, proud, and happy to receive this award for their mutual cooperation in 23. They would like to thank each other for the great collaboration and the discussions in an open spirit of mutual understanding. And they say the award is not only the result of speaking a common language, but in particular also of regular meetings between competent authorities. It underlines the importance of face-to-face negotiations, and both of them are looking forward to continue good cooperation.
Thank you. So that brings us to the fifth and final category of the MAP Awards, and this one is for most improved. And it goes to the jurisdiction that showed the highest increase in the number of cases resolved with full agreement or unilateral relief in 2023 compared to 2022. And this award goes to the jurisdiction that had an increase in both categories. And the winner is France. So there's your spoiler. So let's just dig into the results on that once again. France showed the most improvement with 212 more cases resolved as compared to 2022. And this includes an improvement of plus 137 for transfer pricing cases and an improvement of 75 for other cases. So France, congratulations once again. And Sandra will share the French Competent Authorities team's reaction.
So the International Department of Tax Certainty has been strengthened with a multi-year plan to increase resources in 23, 24 and 25. And the clear growth granted to the unit in charge of MAP and bilateral APAs has enabled it to reorganize internally in 23 and to speed up production both for MAPs and APAs. And thus a second head of delegation was nominated. A rolling annual competent authority meeting was designed to meet first tier partners once or twice a year. And this was already the case, for example, with Canada, hence the award for the good cooperation. And with Canada in particular, they have put in place a systematic bilateral MAP meeting alongside the site visit organized in the framework of APAs, which have fostered faster progress in the dialogue. And so resources and stability are key for efficiency in international tax field, and a plan to complete the oldest procedures in inventory has also been set up, and many competent authorities have been contacted for that.
Thank you. And that brings us to the final award of the evening, the one for the APAs, so the new one for this year. And it rewards the jurisdiction that has most effectively encouraged the use of APAs by maintaining a larger APA inventory as opposed to transfer pricing MAP inventory. This award is measured by using the APA statistics to look at that ratio that I just described. And the winner is Japan. So congratulations, Japan. Japan managed to win this award with an APA to transfer pricing MAP ratio of 84.7%, which is very, very impressive. And we saw some evidence of that earlier. Singapore came second and Korea came third based on this metric. So congratulations to all, but certainly to Japan for coming out on top. We heard earlier from our Japanese colleagues on their great efforts, and the competent authority had the following comments to add to that.
Okay, so Japan is truly honored to accept this award and is delighted to see the NTA's long-standing efforts to use APAs as a key tool to provide tax certainty being acknowledged. They owe this achievement to their past and present staff members' hard work, and moreover to their treaty partners and their spirit of cooperation to resolve APA cases. And they would also like to express their appreciation to taxpayers who played a proper and active role in proceeding with the APA process efficiently. So this award really encourages them to continue their efforts for developing APAs to help move from tax disputes to tax prevention. And so they thank you once again for the incredible honor.
Okay, so thank you for all that. And that brings us to the end of the awards. But before we conclude, just a reminder, as Sandra said at the beginning, that behind all these statistics and numbers, there are people working hard on their own with others to try to make progress here. So I think it's just important for us to reflect on that. Thank them for the hard work. For those who won this year, congratulations. For those who didn't win this year, maybe next year will be your year. We see different people rising to the top in different years. But before we close this session, I would like to invite all the commissioners from the jurisdictions that received awards to come up to the stage for a brief photo. So come forward and let's give them a hand of applause as they come up.
Yeah.